What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on the broad market. We've got our core list of companies that we're always watching, and this week I've got 5 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Please be aware that the market is going to be closed on Friday in observance of Good Friday, so there's the possibility, not necessarily guarantee, just a possibility, that we see some market slowdown and some market chop as we move into the latter half of the week. It's just something to be mindful of on the Wednesday and Thursday session. As always, anything we are associated with is linked down below in the description, and without further ado, let's jump right into these charts. Kicking things off on the SPY weekly time frame, talking about candle structure and location as we always do. For structure this week, I would certainly classify the bar as a bearish indecision bar, simply noting that our upper wick is fairly similar in size to the candle body, which is fairly similar in size to the lower wick. Overall, on the daily time frame, we'll see this quite clearly. There was a fair bit of two-sided balance that took place, and a majority of the red candle body here was due to the gap down on Wednesday. Again, we'll check that out in just a moment on the daily. But for now, in terms of the weekly structure, there was simply some buy-side activity, there was some sell-side activity, and then we closed here at the top of the lower third of the weekly range. So overall, a little bit more indecisive than all-out bearish. Obviously, a close dead on the lows would be a much more bearish indication, but it simply did not happen. From a location standpoint, we do have some bearish things we can't really contest through interpretation, but, you have a bar-to-bar lower high and a bar-to-bar lower low with a candle close underneath the prior week's low. Again, there's no way that we can misinterpret that or, look at some other sort of indications there. It's bearish, right? There's no way around it that is slightly bearish. But if we do look at it in terms of context of this overall move right here, I think we can look back to the engulfing bar. Remember that it engulfed 1, 2, 3 prior weekly highs. We did respect the highest of those engulfed highs on the little lower wick pullback we saw there. And this prior week's worth of trade did technically put in a higher low. We never made it to that area of support right here, which on the daily time frame chart we would know as the double bottom neckline. So nonetheless, I don't think it's as bearish as it might seem based on the implications we talked about just a moment ago. I'm still looking at this as a mild pullback in the face of a very strong rally to the upside. A last data point that we can consider here, it's not a make or break, but it's just the fact that we did hold on to the weekly 50 SMA, the blue line here. Again, it doesn't mean that we have to rally or we have to crack based on a hold or break of that level. It's just one more data point to carry forward. Let's continue on down to the daily time frame chart and start talking about tradable levels into the upcoming week. And of course, we will round out the broad market, at least the S&Ps, with our sectors. So in terms of price action, you can clearly see, again, the two-sided trades that we had. So long and then short on the Monday, Tuesday. There we go. On Wednesday, we see that gap down, an indecisive bar, not really making a ton of progress upward or downward. The following day, Thursday is up, and then Friday is again more neutral. So we are left with a 3-day balance on the Wednesday, Thursday, Friday session, which is going to make our job fairly easy in terms of determining what the first potential trade is. Based on the Friday close being right in the midpoint of this overall 3-day range, I would be fairly neutral until we can either take out the top or take out the bottom for some sort of trade to be initiated. We're basically in balance, and we're looking for expansion next. So because we're slightly bullish based on the pattern of the weekly time frame and what's going on here on the daily, let's talk about upside first, and then of course we will acknowledge and talk about downside. So if we can take out the 2-day highs from Thursday and Friday, your first target is a long into the resistance trend line coming from the top of the flag, touch 1 and touch 2 here from the Tuesday session. On a 30-minute time frame, that might look something like this. So here we are zooming in. If we take out this level, so if we remain up high and continue to put in higher lows, a break here, there's your target. Could roughly be anywhere between 452 and 453, depending on whether or not it's a Monday or Tuesday trade if it unfolds in the first place, right? That's your first long. The second long is a little bit more complicated, and we did talk about it in prior videos. Remember that we had a spike on 2 Thursdays ago right here. And again, this actually might be easier to see on the 30-minute time frame. Let's scrunch this up. So here's that 455.85 level. There's the spike. Remember that in prior videos, we were talking about if we could recapture that, form a higher low above, that would be your long trade confirmation, holding that. So, essentially recapturing the spike lower for the move back towards the top of the flag up there at 462. And I still do think that that level is in play here. So again, first trade might be something that does this, break to here, fantastic. If you missed that one or you want to wait for more confirmation, that's fine. A break of the resistance trend line and then a higher low above 455.85 is really what I would be watching for some more confirmation that yes, we are breaking the bull flag to the upside. And again, your target would be the top of the flag at 462, and then back out to the daily just to search for this upper target. I don't necessarily think it's in play this upcoming week, but that number is up here around 473. So that's the bull case that we just outlined, a couple of trades to watch out for based on our structure. What if it's going to be downside? Because of course, in a 3-day balance, we can of course move to the downside. There's nothing preventing that. And obviously the short-term daily downtrend is lower with lower highs and lower lows in place. So if we do crack the 2-day lows right here around 443.50, we do have support just underneath at the 50 SMA and horizontal level from in here. It was a break and retest level around 441. So not a very lucrative short trade to the downside, noting that we have support coming in fairly close just underneath. After that, we have 437, which as we know is more of that double bottom neckline from in here that we want to see hold. Anything that breaks underneath the 437 neckline, we would really need to reevaluate the chart and see what the context of that move was to determine whether or not it's a serious sort of break in violation of the weekly structure that we were just talking about, or if it looks like it could be recaptured fairly quickly. So to me, 437 will be the line in the sand essentially into the upcoming week. Anything that breaks down underneath will require a reevaluation of the charts. A couple of things that I want to point out here. If we take out our Fibonacci's, if we come from the low of the move to the high of the move, notice that we are respecting the 38.2. So this certainly is well within the bounds of reasonable bull flag consolidation over the course of time. If we get a break, again, I think that this target could be achieved fairly quickly. So that's what we have from that perspective. And then the last one I want to do is from the high down to the low, and all I'm getting at with this is that we are not yet back down underneath the 38.2, which is conveniently aligning with the neckline of our double bottom. If we do happen to give up that 38.2, we know it's back in the courts for the bears. Ideally for the bulls, we want to be above the 61.8, and we're not quite there either. Fairly neutral, right around the 50% retracement from highs down to the lows. Let's get into some of our sectors now, just to determine what's kind of been unfolding. If you followed along on Twitter, I posted a picture of this chart, and this is fairly new to us here on the channel, but these are ratio charts. So in each of these boxes, we have the XLK, we have the XLV, so these are populated with the different sectors, and it is meant to be read like a book from left to right and from top to bottom, and it goes in order of the heaviest weighted sector to the lightest weighted sector. So the XLK, the tech sector, the heaviest of them all, is relatively weak compared to the S&P 500. So again, this is a ratio chart comparing the symbol right here to the S&P 500, and this is just going to give us a quick overview on what is strong, what's weak, and obviously based on the risk on, risk off sectors, we'll sort of know whether or not we can trust a potential reversal from this pullback in the marketplace. So XLK, we want to see this chart turn back higher and at least make it up here towards that 50 SMA. That's the golden line on all of these charts. So XLK needs to do some improving here and not be relatively weak to the market if we're going to see a turnaround. We know that healthcare has been screaming to the upside, great relative strength here that will continue to be a positive force for the marketplace. The XLY, consumer discretionary, technically the third heaviest weight in terms of percentage breakdown. I know we call it the XLV in the midweek, and that's for different reasons here, but in terms of percentage breakdown, it is the XLY. And again, you want to see this turn higher and start showing relative strength to the S&P 500, not continue on this descent underneath a declining 50 SMA. XLF for financials, it is starting to improve off the lows, and we will look at this chart in just a second because I think it's an important one, but again, there's some work to be done. You can see it's been relatively weak to the S&P 500 for quite some time, and basically these four big sectors right up here, it's going to be very hard for the S&P to do anything that these are not ultimately doing. So one out of the three is pointing higher in an aggressive manner. If the rest of these three can't start pointing higher, or the rest of these four, can't start pointing higher, I'm not sure how confident I would be in an overall rally that happens in the marketplace. Down towards the bottom, I know they're fairly small, but these are our risk off type sectors, right? XLP for consumer staples has been extremely strong compared to the SPY. We want to see that pull back in towards the golden line. The same thing with energy. It is going flat, which is what we want to see, but it did start a breakout on the Friday session, which is not what we want to see. We want to see this remain flat, potentially start coinciding with the 50 SMA, if not dip back down underneath. The same thing with real estate. You can see extreme relative strength. We need that to cool off a little bit. And the same thing with utilities. Huge relative strength here. That's a more defensive sector. We don't want to see it leading any market rallies. So I do think that this is a very interesting chart that we can start to monitor. It's something I'll be watching throughout the course of the days. And ideally, again, just to keep it very simple, if you want a quick summary, what we want to watch is for all four of these charts to start pointing in the upward direction if we are going to have confidence in any sort of rally here in the S&P 500. Now, I did mention I wanted to look at a couple of these specific charts, so let's do that now. Let's just go in order of the top three that we watch on the midweek market update. So the XLK for the tech sector, some concerns here, right? We are back down underneath the neckline of the double bottom. Again, that's not what you want to see if the market is going to catch a bottom off of this pullback and start turning around. Now, if the XLK wants to magically gap up for Monday's session, that's fine, but it needs to show and prove a little bit and get at least into this gap overhead for me to start feeling a little bit more comfortable about a reversal from the pullback in the SPY. So this is a bit of a red flag, and we did just see that in the relative strength charts. Let's move along and talk about the XLF for financials, the second heaviest weighted sector that we're watching for. Obviously, we know that it's the XLV based on percentage, but in terms of, the different types of sectors and how they move, this is definitely one to watch. Notice that it did actually hold on to the 37.5 level, which was our line in the sand. Remember that this was a range right here, and that's why that ratio chart is starting to point higher. It's got to remain above 3750. Otherwise, another big red flag in the S&P 500 if we're going to catch some sort of rally off of this pullback. So far, so good, but we will need the support of the XLK mainly. And then let's also take a quick look at, the XLU for utilities, some of these risk off sectors, right? Look at it, how it's still continuing to climb to the upside, needs to catch a little bit of a pullback if we want to feel good about any sort of rallies in the SPY. Again, the same thing happening here with energy, XLE, the breakout on Friday, not ideally what we wanted to see from the Wednesday video. Remember that we did acknowledge this as a bullish pattern, but to look for that reversal in the S&P, we wanted to see it remain sideways underneath 78.50. Let's see if this will turn into a fake break and come back down. I don't know. Obviously, no one knows yet, but that would be a good thing for any sort of rally in the SPY itself. Then I guess the last one we can look at would be the XLY, right? For our consumer discretionary, third heaviest weighted sector that we're watching, you can clearly see it's flirting with the neckline of that double bottom right here, which again is slightly a concern, a little bit of a red flag. It's really got to hold up over 179. Otherwise, I'm not really feeling the love on this pullback so far. So we talked about bullish price action and the potential for bullish trades here in the SPY. We talked about what the sectors are doing. I think you've got to be patient. Remember that we're in the midpoint of a range. You're always looking for edge at the edges. So if we break the top end, that's fine. You want to see if sectors are confirming to give you a little bit more confidence in a breakout. If not, maybe you're patient and then you wait for a revisit to these weak lows down here because technically it is a double bottom, and then you're looking for the flush back down into 437 if the sectors aren't confirming any sort of move that does this, right? That would be your situation where we get a look above and fail. You can start to target the bottom end, if not a little bit further of a continuation based on the trend line and the short-term downtrend just remaining intact. So I know it was a lot of information. The sectors are really going to be what's going to help over the course of this upcoming week. I'll put the link to this chart, our ratio chart, down below in the description of the video so you guys can download it and use it. Keep an eye on it. I think it'll be a pretty nice development into the course of this upcoming week, something that I want to start incorporating into my intraday repertoire. Let's continue along and get through the rest of our broad market. QQQ Nasdaq 100 is up next. I think we'll notice a clear bout of relative weakness here, right? So here is the double bottom. Of course, we are underneath that neckline now. We're kind of right at it. I suppose it's not firmly resolved, and our balance area from Wednesday, Thursday, Friday is not as clearly defined, right? And clearly, we're also at the low end of that balance, if you want to call it that, as opposed to the midpoint like the SPY itself. So overall, upside sort of objectives of this chart, if there's going to be a turnaround, and again, there is relative weakness here. I'm just talking about upside to be congruent with what we did in the SPY. It's obviously the gap fill overhead where, as in the SPY, that gap has already filled, right? So here you're looking for that gap to fill. That's 357 up to 360, about a 3-point range. Definitely something worth trading for if there is a reversal back up to the top. And then of course it's your resistance trend line. If that breaks, obviously, you want the higher low confirmation here to get back up towards the top end of the flag. Again, based on what we're seeing over the past 3 days, it wouldn't be my first thought to be thinking about that here in the QQQ. Instead, if we flush the 2-day lows, this is where, is it really worth it to trade it directly smack into this level right here? I don't know. You have 346. I would really wait for the better breakdown underneath 346. So if we do something like this, another lower high and then an equal low reattempt, that's probably the more attractive trade to get back down to this level right here. And if that were the case, if that's what unfolds in the QQQ, obviously at that point in time, it will have been confirmed as more than just a pullback that we've seen in relationship to this overall move right here. And again, that level to the downside is 335 in your QQQ. Let's take out the Fibonacci's from the low up to the high. And what you'll notice here is that we've actually closed underneath your 38.2. So a little bit more of a bearish indication. It's only 1 bar's closed, so it's not the end of the world if we pop back above and again, reach some of those upward objectives that we just talked about. But overall, just going to illustrate the relative weakness here in the QQQ. And then the last Fibonacci, again, just to stay congruent with what we did in the SPY, will come from this high just because the all-time high was set much sooner in the QQQ, right? But if we do something like that, you'll notice we're underneath that 38.2. So back in the territory of the bears, and the bull territory was never really achieved up and over that 61.8. You can see that's exactly where we resisted on the daily time frame chart. If you're someone who's skeptical and you're like, oh, you're cherry picking highs, well, let's just come up from that high. And again, you can clearly see we're underneath the 38.2, and we also never reached the 61.8. So no matter how you slice the cake here, a little bit more bearish in the QQQ clearly, but still be patient for some sort. I would say, your better breakdown is going to come from underneath 346 instead of just trying to trade for some small range in here. You can clearly see how that opens up through that section of the chart. So that's the QQQ. Let's move along and round out the broad market with IWM, Russell 2000, and our small caps. This one's concerning as well. So I suppose there are more things maybe pointing to the downside other than the SPY. Like the only thing holding the SPY right now is the potential reversal in financials back off of that 3750 level. And then if tech wants to catch back up and move back higher, maybe that supports, but everything else is actually kind of pointing to lower. You can see in IWM, this is now definitely confirmed as a fake break up and over that 208, which as we know from the weekly time frame was a really critical area, right? Obviously, just the low end of the range. We attempted it once in here. That did put in the weekly double bottom. It was a fake break on the daily, and clearly the weekly bar is extremely aggressive to the downside, taking us firmly back down into this range overall on the weekly. So not looking too promising, and also remembering that this is kind of a proxy for risk on, risk off in the marketplace. It's not ideally what you want to be seeing right now. And again, just another bearish piece of information, if you will. We're not holding at the support trend line. On the Friday close, it's underneath, right? And don't get me wrong, it is an inside bar from Thursday and Friday, but overall a more bearish indication. So my first thought would be if we break the low of Thursday, you're just looking to fill up the triangle back down towards 193.50. From there, we would reevaluate the chart. If it's going to move higher, I wouldn't really try to get involved to the long side in here. It's got to show and prove. I would probably only want to look for longs if we can recapture 204, but do remember that that's significant resistance as well because it's the neckline of this head and shoulders, right? On a smaller time frame, like a 4-hour, an hourly, 30-minute even clear neckline, any retests of that could easily turn into resistance. So IWM's not looking fantastic. And again, remembering that it's more of a proxy for risk on, risk off in the marketplace, maybe it doesn't bode so well for that SPY bull flag actually panning out. So the more I walk through this video, and again, guys, this is my routine every sort of Sunday as I prepare for the week ahead, I'm starting to actually think to myself, hey, maybe it's actually not as bullish. Maybe this SPY is being a little bit deceiving here. Nonetheless, I will still follow and respect the levels. If it wants to go to the upside and the sectors are confirming, who am I to say that it needs to be lower, right? You don't want to fight what the market's doing, but as I move through some of the data points, I think there are some more things stacked up on the bear side so far than the bull side. We'll see though, based on the SPY. So hopefully I didn't confuse it. I'm just talking about all the data points I'll be watching into this upcoming week. Let's get into the core list of companies. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video comes out. Kicking off our companies here with Apple, you can clearly see we are sitting right on the neckline of our double bottom, so it's make or break time here for this pullback. We do have some pretty good balance on the Wednesday, Thursday, Friday session. Don't get me wrong, Friday closed right on the lows of that balance, so we'll see. We know, and we just talked about QQQ being relatively weak. Let's see if this 50 SMA can play catch up just a little bit, provide super support at 169 and keep us in the range. The better long trade would probably be looking for the gap to fill, if not confirmation of some sort of higher low, and then starting to retarget the top end of this overall move. Again, it needs to do some showing and proving for that to be the case. As of right now, breakdowns don't really get attractive until we can get underneath 167 inside of Apple. That would be a firm violation of prior support. It was intraday in that bar, but we clearly get it on the daily there, daily here. It then turns into resistance a number of times. So 167 underneath that gets more attractive for shorts, and for longs, I would wait again for some sort of higher low to develop to start to maybe get back up towards the top end of the flag. Don't get me wrong, taking out the Fibonacci's, we are still well within the range of healthy pullback, healthy consolidation, well above the 38.2, but in the short term, use this 3-day balance as your gauge. If we take out the top end, fine, lean on the bull side. If we start taking out the downside, be patient until that 167 breaks. Targets underneath that will firstly come right around here. Let's switch tools quickly and map that in. It's going to be around your 163, all right? So let's continue along. Netflix is up next on the chopping block. What do we see in Netflix? Much firmer breakdown, right? It is technically just like IWM, an inside bar from the Thursday and Friday session, but nonetheless closing firmly back down underneath this prior set of highs. That's much more concerning. This is now confirmed as all now overhead supply. So any sort of moves back higher into 370 roughly, you should look for resistance there. A lower high and then equal low reattempt sets up the short for a rotation back down towards these lows. Or if you're more conservative, you could take the breakdown of the equal low. You could take the short here if you get some sort of inverted hammer, right? You're basically looking for these people to throw in the towel and continue to push some selling pressure on Netflix. If it goes on Monday, maybe it's just a break of the container bar, Thursday's outside bar, right? Because technically we were inside on the Friday session. If it is a move higher and we do something like this, that's fine. I'm not necessarily fishing for longs inside of Netflix until we can take out that 382.75 once again. It's also the daily 50 SMA. If that happens, only a quick scalp back into this double top here at 397. Again, any sort of upside around in here has me feeling more neutral about the chart, not necessarily bullish. Let's continue along and talk about Tesla. What do we have in good old Tesla? Elon Musk, the absolute jokester there over on Twitter. What an interesting guy, right? Nonetheless, what's the Tesla stock doing? We're currently sitting right on the top of the two inside bars. That was this setup right here. And we have that 3-day balance in place. You'll notice that we've closed weak dead on the lows on Friday's session. So if 1022 breaks, you should be looking for lower, and the target would be here, the container bar from this double inside bar setup. That's going to be at 978.50. Anything underneath that, it's clearly a retest of this big breakout level. I would, if we get back down here, start looking for any reason to potentially get long. So hammer candles, indecision dojis, any patterns that happen on the intraday. So again, think intraday here, but an intraday double bottom supporting at 945. That's obviously a scalp up and over your neckline. Any sort of inverted head and shoulders around this area. Any reversal pattern here, I think will be valid just based on a massive break retest if it holds. Again, to me, it looks like a decent risk-reward entry, noting your stop can go just underneath, and you're looking for a pretty sizable move back to the upside to get closer to some of the value that was built out up here. If we do reverse and remain in the 3-day range, we never move lower in the first place. Your longs are probably a patience move, until we get back up towards that 1115, looking for a pop to repair that double top poor high that we have closer to. What number is that? That's going to be 1150. All right. Obviously, your daily resistance trend line will be in play up there as well. So again, I think longs require a little bit of patience, noting that this could be fairly choppy in here. Your next better long is up and over 1115 or over 1150 for follow through closer to that 1200 level. As of right now, again, this 3-day balance and the close week at the lows on Friday has me feeling slightly more bearish about the early part of the week instead of being bullish. So continuing along, AMD, what do we have here? Weekly look is terrible, right? If we go out to a weekly time frame chart in AMD, big descending triangle, I wouldn't really classify this as a bull flag. I mean, the pullback is far too aggressive to consider this a bull flag. If it was going to be a bull flag, it should have done something like this and then gone. Simply wasn't the case. I'm not here to talk hindsight. This is, though, starting to turn into a head and shoulders pattern where your neckline is here. So looking forward, if 100 breaks, not only is 100 obviously a very obvious psychological number from a pattern perspective, it's breaking a massive weekly weekly head and shoulders. It's breaking a massive descending triangle. If you want to look at it this way, it doesn't really look bullish here around that 100 level. So I wouldn't necessarily be fishing for longs around here. I would want it to do some showing and proving, show to us that you will put in a higher low, break the trend line. That starts to become much more attractive for upside. As of right now, based on the weekly look, based on the look of consolidation, a close week at the lows on Friday, it doesn't look good. So if 100 breaks, do know that we could easily get to 95 fairly quickly coming from the top end of this prior structure here. If not potentially lower, my next target would be much closer to about 85, right? So AMD is kind of sitting on a must hold, if you're bullish at least, level, that 100 level. It's a big one here in AMD. So I'm definitely keeping a close eye on this. Again, this has been added to the watch list fairly recently. So we'll see how it moves as we break really important like weekly structure. We haven't seen that yet on AMD in quite some time. So we'll take it in stride. Definitely willing to go to the downside if 100 fails. And if it moves to the upside, I would really want to see some sort of, again, higher low that confirms some of these areas to start fishing for longs. Ideally, again, if this is going to be long in the first place, I'm completely speculating here. I'm not saying this is going to happen, but if this were to do something like this, that's an attractive long trade, right? Once it's proved that it wants to hold on to some sort of higher low, a break of this 110 could get you to the weekly resistance trend line and closer to that gap overhead, right? Currently does not look like a likely scenario. So let's continue along, keep it rolling here. Facebook is up next. What do we see in Facebook's chart? I know there's a lot of lines in here, but they're all important. Let me show you why. So on a 30-minute time frame, we'll check that out in just a second. We will see the importance of this level right here, but nonetheless, we do not have a daily bar that has closed underneath. To me, that's pretty solid, especially noting that we could have afforded a move all the way into 217, some closes underneath that level. It just simply didn't happen. So as of right now, Facebook is looking good. Let's quickly take out the Fibonacci's from the low up to the high, and what we'll notice is that 217 is your 38.2. We're well within the range of bull flag consolidation from this overall perspective. Facebook, I like it. Let's continue to the 30-minute time frame, though, so I can illustrate the importance of those levels. If we look at this, you can clearly start to see some sort of inverted head and shoulders, right? So as long as we hold up at the shoulder line, which we closed right on Friday's session, so we'll see. It's like make or break on the open here on Monday. 222.25. If we're above, your break is clearly the neckline here at 225.50 to get to the bottom of the gap, and then the top of the gap fills up around 231, right? So that's why you can see the Facebook trade is looking fairly attractive. If that's how it pans out in the first place, you could watch and monitor a support trend line that would look something like this. You could classify it as an ascending triangle pattern. It doesn't really matter. We're basically looking at a bullish setup here if we can clear this area of resistance around 225.50. To the downside, if we break, again, I'm not really looking for shorts until we, clearly confirm that 217 is going to be given up. Just like we talked about in AMD needing to show and prove to the upside, Facebook would need to show and prove to the downside. So something that does this for me to start thinking about shorts underneath 217. And currently, the look is like it's holding here. So those are the levels I've got for you inside of Facebook. Let's continue along and talk about NVIDIA. This one is horrific. So to me, this is what, if the QQQ fails at the sort of double bottom neckline, this is what the QQQ could easily turn into. This is what the SPY could turn into. Everyone was sort of, hooting and hollering about the rally off the lows here. Look at how much of it has been given back here inside of NVIDIA. Obviously, AMD never had the rally in the first place. I'm sure someone knew something, wasn't buying up AMD. The downgrade came, all of that's kind of hindsight thinking, right? But nonetheless, a big give back here inside of NVIDIA. Also a close underneath your daily support trend line. The hammer from Thursday never resolved higher, and we're sitting right on this prior breakout point that was resistance. Let's see if 230 turns into support. If it doesn't, very likely that you do get that 100% retracement back down towards 209. Noting, if we come from the lows here up to the highs, we are well underneath the 61.8. Even if you tell me I'm cherry picking lows, if I do something like that, we're even further underneath the 61.8, right? So to me, it's pretty bearish inside of NVIDIA right now based on how this chart has unfolded, which, again, I know a lot of people were feeling pretty good about this rally here. I suppose it's unfortunate for those who were long, but nonetheless, looking forward into the short-term outlook, this is bearish, right? If 230 breaks, sure, there's some chop in here, but ultimately your next support's way down around 209, right? A 20-point move to the downside available inside of NVIDIA. Now, the counter sort of argument to this would be we're a little bit extended to the downside, right? So if there's some sort of dead cat bounce, what I would be watching for is any failures to get back above 244. That's your bearish indication, simply noting that we had that as the neckline of your double bottom. If we can't get back over it and we do something like that, that's a clear lower high on the daily time frame. That's where your equal low breakdown can occur from, and you get that 20-point swing to the downside. So that's how that could potentially unfold. If it is going to be bullish, this one needs to break above that level we just discussed, 244, put in a higher low, and then the next trade overhead is the gap from 253 up to 258.50. Again, as of right now, that would not be my first thought as we head into this upcoming trading week. Let's continue along. Microsoft is up next. You can clearly see a beautiful flush point developing here at 296.25 on our daily time frame. We also have day-to-day lower highs forming, a close week at the lows on Friday. If that cracks, you're looking for the equivalent of that NVIDIA 230 level, which would be roughly 290 here inside of Microsoft, right? Back down to the double bottom sort of neckline from that perspective here. You could just look at it as a breakout point. You get the gist. From here to here is your short trade, and based on remaining in these 3 days of balance, this is not oversold, right? This could easily make that move on the Monday or Tuesday session early on in the week if we crack underneath 296.25. Anything underneath that, again, think about what we just discussed in NVIDIA. There's quite a ways to go for that 100% retracement back down towards that 271.65. Let's quickly take out the fibs. We'll go from here to the highs. We're right at the 50%, so not quite as bearish from that perspective. From the lows up to the highs, we are underneath the 38.2. So again, not ideally in bull flag consolidation anymore. So it's not as bearish as NVIDIA, but I do like the fact that it has already consolidated for 3 days. If it were to break down, it wouldn't feel like you're chasing. You could easily place a stop loss just back above the level, because if we do something like this, higher low, just like we talked about in NVIDIA, your target overhead is going to turn into the gap fill from 307 up to 309.82 is technically the level. And then from there, this is also a daily pressure cooker top, okay? So I'm not saying Microsoft's bullish, right? Don't misconstrue that what I've just talked about and outlined to the upside is bullish. It certainly isn't suggesting that, but if there is some sort of turnaround, it is more bullish than NVIDIA, whereas NVIDIA is clearly the weakest thing that we've looked at so far, right? That's all I'm getting at. Let's continue along and talk about Amazon, last but not least, the beast, but only until June when it splits, right? You can clearly see here also relative weakness, 2-day lows stacked at the 50 SMA. More importantly, from the weekly time frame, if we zoom out here, remember, I know I sound like a broken record, but here's your support, neckline of the weekly double bottom right here, firm weekly close back down underneath. So it's not having me feeling so great about our Amazon daily, right? So if we break the 2-day lows, give up the 50 SMA, next target underneath is coming in around 29.80, and then underneath that, I would start eyeballing this area here. Let's go ahead and throw that on. Oops, let's switch tools and try that one more time. I know it's a late one today, so by the way, since it is a late one, if you know the keyword, drop it in the comments section now. Otherwise, I'll say it at the end of the video. Regardless, we have 28.20 as that next downside target. Again, this is a fairly bearish sort of look here on the Amazon chart based on the failure to hold above that 31.76, the weekly level of the double bottom neckline, right? If it is going to turn higher, Amazon, I'm not really even confident until we can show and prove with that higher low above that level once again, and then your resistance trendline, your gap overhead, will start to come into play. You have this as overhead supply now. Again, Amazon, based on the weekly structure that it gave up, not feeling great about this one to the long side. Instead, again, 2-day low breaks could take us lower into this area right here, 29.80. So that's what we've got in the core list. Let's get into these ideas. Quick reminder to hit the thumbs up button, the subscribe button, the bell button, all those buttons YouTube tells us to tell you about, and let's get right into these trade ideas. First one is going to be on PFE for Pfizer. This obviously falls into the category of healthcare, and healthcare has been on fire recently. Huge relative strength there. I'm noting that we have a bull flag here on the daily that's already broken out, but we have not crossed through the flag highs. Usually, we would expect some sort of pullback here, a higher low, and that's where you start to take that level out. And looking left, our next target overhead is coming from the lower high from here to here, and it was also prior support as well, right? That's 57.21. So any higher lows in Pfizer could be viable for this to turn into a third touch pressure cooker top, and boom, looking for the break eventually into 57.21. Just to give you an idea of what I would deem as an acceptable pullback, let's take out those good old fibs, go from low to high, zoom in a little bit. As long as we're above 53.41 right here, I think we're okay for something that would ultimately do this. And again, on a third touch, maybe that's the one one that breaks the camel's back, I believe is the saying, and we move higher from there. Anything that really chops around underneath, back around in here, not so interested in the trade. Let's continue along and we'll take a look at WFC Wells Fargo. What do we see here? Obviously, we talked about financials potentially reversing off of that 37.50 level, and this has a similar look down below. So I'm just noting that the risk reward sort of makes sense here. You could look for long entries up and over these highs. It did start to show improve on Friday, taking out the Thursday hammer candle high, closing strong at the highs on Friday. If we take out roughly 49, look left, there's some pretty thin structure on the way down here. Our next target overhead would be way up around 53. Where does your stop loss go? Well, if you're a swing trader, you could put it underneath the hammer low. That's roughly, maybe that's not as great as I think. Maybe that's closer to a 1.5, 2 to 1. Regardless, if you could get your stop to break even as soon as possible, or even if you were looking for, you could put a stop underneath here, just the lows of this sort of bottoming action, and that would sort of increase your risk reward ratio and still be sort of viable. You just wouldn't be looking at the anomaly of the Thursday sort of breakdown there. Nonetheless, the risk reward seems favorable here in Wells Fargo is what I'm getting at. You can clearly see the thin structure on the way down. If we get continuation, I would imagine that we could look for a sizable move through that thin structure on relatively tight risk. Let's continue along and talk about FCX, which is a metals company, pulling back into a support trend line after an equal high. So generally speaking, you like to buy pullbacks to support trend lines after a higher high, but nonetheless, noting that, again, if we're sort of in that risk-off type environment, if sectors continue to sort of deteriorate and improve in, deteriorate in the risk on and improve in the risk off, then this could break the hammer highs and move back up closer to this on the daily time frame. And if we get a third touch, you know the deal, that turns into a pressure cooker top. If we can put in some sort of higher low over the course of time, looking for breakouts up and over 52. So a more conservative trader might wait for that to happen, something that does this. A more aggressive trader could take the long here, looking for that in the first place with a stop underneath the support trend line. So looking for longs inside of Freeport McMoran. Let's continue along and talk about Disney. This one has a 3-day balance in play, just like everything else. Well, not everything, but most things that we've talked about, right? It had some sort of 3-day balance going on, of course, with a gap overhead. So if this one takes out the top of the 3-day balance, looking for that gap to fill, that's probably a day trade, a quick scalp. And then from there, you could watch for continuation into the 2-day highs here from Monday and Tuesday around 139.17. If we remain in the range, that builds the sort of momentum and sort of reasoning for watching for some sort of larger breakdown. I wouldn't take the break of the 3-day range lows, but instead, if we crack this daily level around 129.21, let's look left and find a target together. I think we're going to have to go out quite a ways, right? Our next major target here on the weekly perspective would be much lower, around 120, roughly $10 lower, right? So certainly something worth keeping an eye on here inside of Disney. If we get a breakdown from the 3-day range, that's your first sort of dead giveaway, and then obviously a larger break under 129 takes us for that move lower into 120. Last but not least, we have Target. This is a bullish trade idea, noting that on Friday, we gapped up and held outside of this prior consolidation range right here. You could look at it as exactly that, a range. You could look at it as a sort of sloppy double bottom, even though it's not at the bottom of anything. You could call it the neckline. You could call it whatever you want to call it. Regardless, it's hard to deny that anything that holds up above that 228.75 level, let's just call it 230 for round number's sake, strikes me as bull flag consolidation from this overall move here. A crack of this level, looking left, it's aligning perfectly with this prior high. It's aligning with the daily 200 SMA, a breakout up and over 236, look left, boom, 250 could be on the horizon sooner rather than later. Remember that this was building up potential energy. That energy needs to be released. So if it's going to be a true breakout, consolidation and a move should be a pretty serious move. If it's going to turn into a look above and fail, aka price acceptance back down underneath 228.75, over the course of time, we could look for the bottom end of the range, but noting that consumer staples are still relatively strong to the S&P, I probably wouldn't push your luck, and I would look for something that maybe comes back down towards the lows of the Thursday session. Let's quickly check in on the 30-minute time frame. You can see very thin structure, especially on an intraday. My first target would probably be somewhere in here around 222.56 if we break back down underneath that 228.74 based on our daily structure, right? So you can see that trade here if it turns into a look above and fail in the first place. But ideally, we're watching for consolidation and then a breakout up and over 236 for continuation into 250. So that's going to round out our trade ideas. That's going to round out the video. If you made it all the way to the end and you're watching on a Sunday night, drop the comment Night Owl. That is, of of course, the infamous keyword that we use here around the channel. I'm sure you've already seen it in the comments, but nonetheless, now you know the inside scoop. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked down below in the description. We will return to making videos on it this week. And with all of that being said, I wish you all a green trading week.